Welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because the global liquidity index was correct in hinting at a bullish July, and it's still pointing towards a bullish August as well, and it still hasn't failed us yet this cycle. We see something similar if we look at seasonality and Bitcoin's monthly returns. July was supposed to be a good month based on seasonality, and it was, and every post-halving year like 2021, 2017, and 2013 had a bullish August following a bullish July, so I don't see why this year of 2025 would be any different. Price action is also saying something very similar. We were bullish on a Bitcoin breakout in July because of the rally and bull flag we had going into the month. And usually once an asset breaks out and enters price discovery, your base case should be that momentum is going to continue. So price action and momentum are pointing to a bullish August as well. And this is why the early cycle scenario remains my base case, where Bitcoin rallies into August and perhaps even early September before a major pullback, because we know September tends to be a very terrible month for Bitcoin and traditional markets. And we know that the global liquidity index is showing early signs of a downtrend here. We have a high, a low, and so far this looks like a lower high. So all that's left is a lower low. Now, of course, if we see a major reversal and global liquidity skyrockets higher, we can definitely change our outlook based on that data. But based on what I'm seeing right now with seasonality and global liquidity, we're going to have quite the hurdle to get past in September of this year. So could September just be a pullback into a major breakout in Q4? Of course, but as of right now, I'm going to be very cautious going into September. I'm still open to the Q4 top scenario where Bitcoin rallies further into Q4, but until we see global liquidity follow through, I'm going to be a little bit cautious going into September and October, but we're going to see how price action develops and seasonality develops going into that fourth quarter. Now let's talk about why the global liquidity index is showing early signs of a downtrend and what it would take for it to break higher and put more upward pressure on risk assets. And this is, of course, very heavily driven by the US dollar index. It put in a low, a high, it looks to be putting in a higher low. So next we would expect a higher high and a major bounce on the US dollar index, and a strengthening dollar would put downward pressure on liquidity globally, and that would not be good for risk assets in the short term. So we'll see if that just ends up being a quick bounce that rolls over or ends up being a larger bounce that takes a little bit longer, but we're going to have to see how that plays out before jumping to any conclusions as to what the US dollar index is going to be doing next. And a lot of that is going to rely very heavily on what the Federal Reserve decides to do with the rate cuts. Right now, the market has priced in only 2 rate cuts for the remainder of 2025. So if the Fed ends up doing less than this, that would end up strengthening the dollar because the yields on bonds and dollar assets would be higher. But if we see more rate cuts priced in, that would put even more downward pressure on the dollar and would result in global liquidity increasing. So we have a pretty important meeting coming up next week on July 30th. Now the market has pretty much fully agreed that there won't be a rate cut, and the Fed has really not been surprising the market this cycle, but we have our first rate cut expected in September as of right now. This can of course change as we get more inflation and labor market data between now and then. But as of right now, we're expecting 1 rate cut in September and another rate cut in December. I don't think a 0.5% drop in the Fed funds rate is going to do much for the economy or markets, especially because markets have already priced it in. So if we do want to see markets get excited, we need to see more rate cuts than are already priced in on the CME Fed Watch tool. Although we're not expecting much in terms of rate cuts, one surprise catalyst for markets would be quantitative tightening ending sooner than the market currently expects. It has almost completely slowed down, so that announcement could be a bullish catalyst. But with inflation still quite a bit above the Fed's target and the labor market still quite resilient at a 4.1% unemployment rate, maybe you don't fully agree with these numbers. Maybe you think it's 4.5%. Maybe you think it's 5%. But as of right now, the data we're going off of is 4.1%. And we have growth still positive, with the Atlanta Fed expecting 2.38% for the Q2 GDP print. And of course, we have the S&P 500 in full-on breakout price discovery, which of course is an amazing tailwind for Bitcoin, which has entered price discovery as well. So if you look at inflation, you look at the labor market, you look at growth, You look at risk assets, I don't see the excuse here for the Fed to cut rates by 200 basis points or 300 basis points like Trump wants them to. If anything, that would just spark a resurgence in inflation and even more issues down the line, but we'll continue to monitor it and see what happens. So base case over the next month, month and a half is that Bitcoin continues grinding higher, and then we're going to reassess from there. What am I doing with my portfolio to try and position for that? I took some profits on Ethereum on Monday because of how big of a move it's experienced recently, but I still have plenty of exposure for upside. So don't worry about me feeling sidelined if this market does continue rallying higher. But I am slowly building this cash position just for peace of mind in terms of how deep we are into the cycle and how deep we are into the post-halving year. I mean, we have Bitcoin trading at $120,000 here. So even the chances of a 2x in the remainder of the cycle with Bitcoin crossing 240,000 is becoming less and less likely as we approach the end of the post-halving year, in my opinion. And this is exactly why Monday's free weekly report was called Sticking to the Strategy. At this phase of the cycle, there is just nothing but endless bullish price action, bullish narratives, reasons why we're going to 300K, reasons why we're going to 400K, 500K. Maybe we're never going to have bear markets anymore because ETFs are going to change everything. But I have found it to be the best time to stick to your strategy because you can no longer rely on your emotions to make logical decisions that you would have otherwise made during a calmer period. And as always, if you'd like to learn more about my portfolio automation system or mental models I use to navigate this market, you can check out the Crypto Enjoyers program in the video description. But as of right now, Bitcoin is still nicely chopping around in our expensive region. This means that you're not getting a great deal buying Bitcoin at these prices. I know some people completely disagree with this and they consider anything below 500K cheap for Bitcoin over the next 12 months. But for me, the expensive region is just for my own accountability of reminding myself that it doesn't hurt to take some profits in this area. And then perhaps I will start taking them even more aggressively in the very expensive region once Bitcoin is over 150% above the 200-week moving average, which it tends to mean revert to, even if we don't get a 70% bear market anymore because this asset is getting larger and less volatile, just like the S&P 500, just like the NASDAQ, just like Apple stock, Nvidia stock. I do expect Bitcoin to mean revert to its 200-week moving average. But because it's a moving average, it does continue rising week after week. So maybe we end up running into it at 70,000 or 80,000, depending on when the correction and bear market ends up happening. But it is something I try and assess Bitcoin's value based off of, since we can't rely on more traditional methods of valuation like a earnings multiple. And speaking of earnings, while everybody is arguing about 200K Bitcoin this cycle, 300K Bitcoin this cycle, no more bear markets, institutions changed everything. A Satoshi era Bitcoin investor cashed out 80,000 Bitcoin for $9 billion. And this, of course, resulted in a bit of panic and quite a bit of front running and resulted in Bitcoin tumbling down to about 116,000. But this one sale by this one OG whale liquidated 213,000 traders for $600 million in just 24 hours. And although it's unfortunate watching these futures traders get liquidated over and over and over again, the good news is that this resulted in only a 4% correction for Bitcoin, which is pretty incredible considering how much Bitcoin was sold. And the same way everybody always complains about price not moving to the upside, even though we're seeing billions of dollars of buying, it also doesn't go that much to the downside when we see these huge sales that everybody tries to front run. And it really goes to show you how liquid and big of an asset Bitcoin is now, because a sale like that just a few years ago could have resulted in a 10 to 15% correction very easily. But as I've been saying throughout this breakout, as long as Bitcoin maintains above 110,000, this is just a leverage washout before continuation, in my opinion. Sentiment still hasn't gone that crazy, even with altcoins pumping recently. We are now at a reading of 64 on the Fear and Greed Index, so we're not seeing a crazy amount of greed quite yet. I'll be a lot more concerned about a local top if we see the market enter extreme greed. But if anything, we're now heading back closer to neutral as these futures traders keep getting liquidated out of their positions. trying to leverage long the breakout. We have seen ETF inflows for Bitcoin slow down a little bit, and now this has happened plenty of times in the past, so we'll see how it develops over this upcoming week to see if this is going to be the new trend or if it's just a very minor blip. MicroStrategy was able to expand what I believe was going to be a $500 million preferred stock offering up to $2 billion, and that money is most likely going to be used to buy more Bitcoin, and usually the market tends to front run these moves, so I don't expect any huge drops until this purchase gets announced. And I know we kind of get used to these Bitcoin treasury announcements, but it's crazy to think that we now have 35 public companies holding over 1,000 Bitcoin, which is over $100 million in BTC. And that is a trend that seems to be accelerating. So we'll see how long this trend can maintain. But as we saw from that single OG whale that was able to sell 80,000 Bitcoin, these zombie companies holding a couple hundred BTC or a couple thousand BTC here and there needs to increase quite a bit if it's going to keep up with the sell pressure that comes from whales and long-term holders as price goes higher and higher and they lock in more and more profit. And speaking of more and more profit, Ethereum's chart continues to look very solid. It seems like so many people are sidelined on this asset and piling it back in because they gave up on it back when it sold off down to about 1,400. And with this aggressive of a rally, our next target would be 4,000, and I do not think it holds on the 98th attempt. So I'm expecting 4,000 to break, and if it does, I would expect Ethereum to target the all-time highs very quickly, and then things start to get a little bit trickier, and we'll have to see what happens with profit taking these treasury companies and ETFs once Ethereum makes new highs. But I don't see why it wouldn't make new highs as long as Bitcoin doesn't jump off a cliff within the next few weeks. These Ethereum treasury companies are still accumulating more and more Ethereum. I believe they've officially crossed 1% of the total supply, and it feels like this has only been going on for a few weeks and we've already reached this point. Bitmine Immersion Tech is in the lead with $2 billion worth of Ethereum, and Sharpling Gaming is right behind them at 1.31 billion. So as long as this trend continues, I expect it to put upward pressure on Ethereum's price as long as this narrative is intact. BlackRock's Ethereum ETF officially crossed 10 billion in assets, and it's the third fastest ETF to ever do so. You can see the BlackRock Bitcoin ETF here in orange and the Fidelity Bitcoin ETF here in blue. They skyrocketed in holdings right when it launched because of all the demand for those Bitcoin ETFs, but Ethereum was more of a slow start but has been absolutely skyrocketing recently and has now crossed that $10 billion threshold. We are now officially on a 16-day streak of inflows for the Ethereum ETFs, and the most recent day was 450 million. And you can see the incredible demand that's been coming into Ethereum. Maybe these ETF buyers are rotating from Bitcoin because it's been seeing some outflows. Maybe these ETF buyers are trying to front run the strategic reserve buying from these Ethereum treasuries. But as long as the ETFs look like this, I think 4,000 is very likely, and I think we see new all-time highs very soon, especially because we've watched Ethereum, the smaller asset, outpace Bitcoin on ETF inflows for 4 straight days in a row. So it's no surprise we've seen an incredible move on the Ethereum Bitcoin pair, and now that it's closing above the 50-week moving average, the 100-week would be the next target, and that can happen very quickly as long as Bitcoin remains flat and Ethereum keeps up that momentum. But of course, there's always two sides to the coin, and there's already people calling for $9,000 Ethereum, $20,000 Ethereum, and I hope those price targets happen. But there's also some concerning signs as well. If we take a look at the top altcoins combined open interest here, we can see a huge increase in open interest here recently, which is just a proxy for the amount of leverage in the system on these altcoins and the amount of bets being taken. The first time Ethereum hit 4,000, the open interest was under 20 billion. The most recent time in December, right after the election, open interest for Ethereum hit around 20 billion. I'm just taking the total 35 billion number and subtracting the other major altcoins, Solana, XRP, and Doge. So 20 billion the last time Ethereum hit 4,000. And this most recent jump is 30 billion in open interest on just Ethereum alone. And we haven't even crossed 4,000 yet. And with this much open interest and risk taking, I would expect a lot of volatility and leverage washouts on the way up, because it's unlikely all of these leverage and futures traders get a free ride on Ethereum directly to $6,000 without any major washouts. We're also seeing those animal spirits start to come back in the NFT market with a $6.6 billion increase in July, which is about a 94% increase in the valuations of these Ethereum NFTs. And we're seeing the largest Ethereum validator exit queue in about 18 months. And this is just the amount of Ethereum that has tried to unstake and is waiting for the unstake process, which I believe is about a 2 to 3 week wait. So we have to assume that some of these unstakings are to take profits and sell quite a large portion of those holdings. Maybe they're not all going to get sold. Maybe it's to move to other things in DeFi or who knows what. But this is the biggest surge we've seen in Ethereum being unstaked in 18 months. And you can see it's huge compared to every spike before it. So some volatility and profit taking would not surprise me. And there's always risks in this market. It's never just bullish only or bearish only. There's always two sides of the coin, but I'm still expecting more upside for Ethereum. Now that brings us over to Solana, which has seen a big rejection off of the range high at about 200. We really don't want to lose the range mid here at about 160, especially with how well altcoins like Ethereum have been doing recently. Weekly closes below 162 here would start to look like a breakdown of a major bear flag, kind of similar to the previous bear market. So we really want to see Ethereum maintain this higher low and higher high structure and not close below 162 on the weekly chart. As for Solana, Bitcoin looks okay, mostly going sideways. We don't want to see it lose the December 2023 lows, but as long as Ethereum keeps doing well and keeps getting those ETF inflows, I think investors will be excited about the Solana ETFs that are going to be launched later this year. And I would expect it to head to at least this level on the Solana Bitcoin pair. And I still expect Solana to do well because of all of the usage happening on the chain. So we'll see what happens. It's still nice to see Ethereum and Solana back in the green on a yearly rolling basis, and I still believe they have higher to go. But as we look forward, the federal government is still running huge deficits, and that trend seems to be worsening and not getting better. And exponential debt growth means exponential money supply growth and fiat currency devaluation, which is bullish for our risk assets like the S&P 500 and bullish for our fixed supply risk assets like Bitcoin. But as always, let me know what you expect. Thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.